What if I told you the holy grail of investing isn't a secret stock? It isn't crypto. It isn't real estate. It's a principle so powerful it can turn chaos into opportunity and keep you from getting destroyed when the market does what it always does. Crash, recover, and repeat. And the crazy part? Most people think they're diversified, but they're actually betting on the same thing, in different costumes. Tonight we're going to break down Tony Robbins's holy grail of investing, the rule that separates speculation from wealth building, and why it matters more now than ever. And by the end of this documentary, you'll have a simple system: how to build an all-weather portfolio, how to stop panicking in downturns, and how to invest like you're building a machine, not chasing a miracle. If you've ever felt like investing is a rigged casino, you're not alone. Most people are told, just buy some stocks, hold long-term, you'll be fine. But then life happens. A recession, a crash, inflation, a layoff, and suddenly, long-term feels like a luxury you can't afford. Tony Robbins calls it the greatest financial anxiety loop on earth. People invest without a plan, panic when the market drops, sell at the bottom, then swear off investing, then come back at the top, and repeat. It's not about timing the market, it's about time in the market, with a strategy that can survive the storms. And that's where the Holy Grail comes in. Tony Robbins didn't become a wealth teacher because he wanted to be a finance guru. He became one because, like many people, he realized money is emotional. Money triggers fear, money triggers identity, money triggers survival. So he went on a mission: interview the world's best investors, Ray Dalio, Jack Bogle's legacy, hedge fund legends, entrepreneurs, money managers, and what he kept hearing, again and again, was one core idea: diversification is the only free lunch. But not the way most people think, because most people confuse owning many things with being diversified. Tony calls that false diversification. The Holy Grail is true diversification, not by labels, but by how assets behave when the world changes. Let's do a quick test. If your portfolio is mostly S&P 500, NASDAQ, a few tech stocks, maybe a growth ETF, some safe dividend names, you might have 50 holdings, but you're basically making one bet. And when risk switches off, like in a crash, they all fall together. That's why Tony says the real question is not, how many positions do you have? It's, how many uncorrelated bets do you have? Because real diversification means, when one thing goes down, something else is built to go up. Or at least hold steady. Tony's Holy Grail can be summarized like this: the Holy Grail isn't pick the right winner. It's build a portfolio that doesn't need to be right. Because markets don't reward intelligence the way people think. They reward positioning and staying power. If you can avoid catastrophic losses and stay in the game, time becomes your unfair advantage. A huge influence in Tony's investing framework is Ray Dalio's all-weather thinking. The idea is simple: the economy moves through seasons, like weather. Sometimes you get rising growth, rising inflation, falling inflation. Most portfolios only thrive in one season. Then, they get wrecked in the others. The Holy Grail is to build something that can survive all seasons. Think of it like this: most people build a sports car portfolio. Fast, exciting, fragile. Tony is talking about building a 444 wealth machine, built to drive through storms. Let's make this clear and cinematic. There are two big forces that dominate investing. 1. Growth. Is the economy speeding up or slowing down? 2. Inflation. Are prices rising fast or cooling off? Combine them and you get 4 environments. Different assets tend to shine in different conditions. Stocks often love growth. Bonds often love disinflation and falling rates. Commodities can protect during inflation. Cash can protect during extreme uncertainty. Gold is often treated as an insurance asset. If you're only in one basket, you're not investing, you're hoping. Tony doesn't just talk about diversification, he talks about asymmetric risk, meaning you want situations where your downside is limited, but the upside can be meaningful, not gambling your future on one outcome. The wealthy don't aim to be right all the time. They aim to protect capital, survive volatility, and let compounding do the heavy lifting, because the real enemy of wealth is not low returns. it's permanent loss. In Tony's wealth teachings, there's a villain that shows up again and again. Fees. Even small fees, 1%, 2%, can steal hundreds of thousands or millions over a lifetime. Tony hammers this because it's invisible. The market takes risk openly. Fees take wealth quietly. So part of the Holy Grail is owning smart, diversified assets at the lowest cost possible. Because saving 1% in fees can be like earning 1% more every year, with no extra risk. Now, let's turn philosophy into a structure. A simple Tony-aligned approach is core plus satellite. Core, your wealth machine. Low-cost, diversified holdings designed to survive seasons. Broad stock exposure. High-quality bond exposure. Inflation hedges, depending on strategy. Maybe gold or real assets as insurance. Cash reserves for stability and opportunity. Satellite, your conviction layer. Smaller positions where you have high conviction. Thematic tech, crypto, individual stocks, private business bets. Core keeps you alive. Satellite keeps you inspired. But the rule is, your core must be strong enough that you never need your satellite to save you. If Tony's documentaries had one recurring theme, it's this. Success is a psychology game. Most people don't lose because they chose the wrong ETF. They lose because they couldn't handle fear. They sell at the worst moment because they were never trained to expect volatility. Tony's mindset is, volatility is not the enemy. Volatility is the price of admission. You don't get the long-term reward without enduring short-term uncertainty. So the Holy Grail is also emotional. Build a system you can stick with because the best portfolio is the one you don't abandon. Here's a simple way to model Tony's thinking without getting lost in finance speak. Think in buckets. Bucket 1, sleep well money, cash reserves, emergency fund, short-term needs. This buys peace and prevents panic selling. Bucket 2, core compounding, diversified, low-cost, long-term holdings. Bucket 3, inflation, crisis insurance assets that can hold value when money loses value. Bucket 4, asymmetric upside, your high upside convictions kept at a size that won't destroy you if wrong. That's the Holy Grail, a portfolio that protects you from your worst impulses, and still gives you upside. Let's tell a story. Two investors, same income, same intelligence. Investor A builds a hot portfolio, mostly growth, mostly one narrative. Investor B builds an all-seasons machine, then a crash hits. Investor A watches their portfolio fall 40%, 50%, and something breaks, they sell. Investor B also drops, but not as violently. They rebalance. That one difference, rebalancing instead of panicking, can create a lifetime gap in wealth, because rebalancing forces you to do what emotion won't. Sell what got expensive. Buy what got cheap. In other words, buy low. Sell high. Not as a slogan, as a system. Tony loves anything that creates automatic discipline. Rebalancing is one of the purest forms of that, because instead of guessing the future, you follow rules. Once or twice a year, you reset allocations back to target. It's boring, it's simple, and it's the reason many people outperform their own emotions. If we condense Tony Robbins' wealth approach into rules, don't lose big, protect downside, diversify by behavior, not by name, keep fees low, have a plan for storms, rebalance with rules, stay invested long enough for compounding. This is the Holy Grail mindset. You're not trying to win this year, you're trying to build something that wins for decades. No matter what markets are doing, fear or euphoria, the Holy Grail stays the same. Build a system that doesn't depend on prediction, because prediction is fragile, preparation is powerful. If you're always asking, what's the next big thing, you're playing the wrong game. Ask instead, what structure makes me unbreakable? That's Tony Robbins investing in one sentence. Here's your takeaway checklist. Pause this and use it. Holy Grail checklist. 1. Do I have an emergency fund so I'm not forced to sell in a crash? 2. Are my investments diversified by how they react, not just by number of holdings? 3. Are my fees low enough to protect compounding? 4. Do I have an inflation crisis hedge or protection plan? 5. Do I rebalance with rules, not feelings? 6. Is my risk level something I can hold through storms? 7. Do I have a simple written plan? A written plan turns chaos into structure, and structure is what makes you unstoppable. Listen, the market is going to do what the market does. It will scare you, it will seduce you, it will punish impatience, and it will reward discipline. The Holy Grail is not a hack, it's a decision. You will not build your future on hope, you will build it on design. So if you remember one thing from this documentary, remember this, because if you survive long enough, compounding becomes a force of nature.